On Friday, we had a nasty reversal right around 10 o'clock. Markets were up about 12, 13 handles, following through from the pre-market. We rallied. We tried to break out of that ascending triangle that I showed you guys on Friday, and then we just kind of sold off. And we went sideways, and then we sold off again at the end of the day. And then we had some breaking news coming out of Washington. That didn't help the bullish case, and the market sold off. But if you looked at the market, if you looked at the sell-off, it was the lowest volume day of the year. Okay, what does that mean? That means that the institutions were not actually active selling down there at the lows. And why? Well, we looked at the market on close orders, and they were about 376 million for sale. That's really nothing at all. You want to see anything over 700 million and into the billions, and then that's something that you want to really take note of. But we had very little selling as far as market on close orders. We had very little volume, if at all, the lowest of the year. So that told me that it was algorithmic trading, right? Computerized trading, and of course weak longs and retail getting out of their position because they didn't want to go into a weekend where there could be a possibility of war. Well, Donald Trump delivered again, and but they had taken out 3 targets in Syria where they thought chemical weapons were being produced, along with France and the UK. So there was a coalition effort, which is actually very good. It was a one-shot deal. Boom, they took out the factories, and that was pretty much it. What does that mean? Well, we don't know yet because as I'm recording it, the futures are not open. It's Sunday, and I'm getting it out to you so you guys can listen to it and make notes and get ready for trading on Monday. My opinion, there's no collateral damage. There's no boots on the ground. We're not fighting back and forth. I think it's going to be a knee-jerk reaction today around 6 o'clock when the market opens. Maybe there's some selling, but I do think that at one point going into Monday, we could actually start to reverse. If, of course, there is no other news coming out. Now, we do have commitment to trade reports. Very interesting. As we all know, Monday is commitment to trade report day here at TMT, where we go over it. I'm going to go over that with you. And pretty crazy development that's happening in the indexes. So let's take a look at the VXX. Now, why is the VXX down when the market was down? Well, it doesn't have to always go up every single day, but like I told you before, the VIX is a skewed product, and if we have no volatility, and I suspected that the VIX would have gone out, which I believe it did, but VXX actually rolled over. So this is why I said be very careful here when you're looking to buy here at the highs. You want to buy on really low spikes, big spikes lower, or you want to short and heavy spikes higher like here and or here. So if at all, let's let it come back down to the 39.89, and if you are looking to buy volatility, your stop is very easy to manage. You're right down here within 15-20 cents, and then you'd get stopped out because why? Then we would be approaching back down here at the lows again. All right, so that's the VXX. Pay attention to that. So let's see what happens. Now let's talk about the commitment to trade reports. Last week I showed you how the crowd, right, a large speculative traders, right, that we call the dumb money in this report. Not that they are, but that's what we call it in the report. Have been short NQ for the first time in a very, very long time, where the producers are long the NQ. Well, they are still short the NQ, not as much, and the producers are not as long NQ anymore, but they're still long being above here. So very interesting developments. This remains the same. Now, let's take a look at next report, and that's going to be the S&P Big Lot 500. All right, this is the big lot. This is where it's not the E-mini, where the E-mini contract is a fraction of what the big lot contract is. Unbelievably long. Look at the producers long the S&P Big Lot Commitment to Trade Report, the S&P 500 SP. Okay, interesting, right? Why? Well, okay. Take a look at the E-mini. The E-mini, the producers are extremely short. The ES. So conflicting statements here. Okay, now could the ES be a hedge for them against their long position? Absolutely possible. That is possible, but no one knows. So we have to let price tell us where this market is going to be headed, right? We talked about having upside gaps that are going to need to be filled. It looks like that we were on our way. I think that the markets are made to fool the masses. You hear me say that quite often here in our TMT's research video, and I do believe so. I think the market, if you were going to tell me yes or no, has the market topped, I'm going to tell you yes, the market has topped, but unofficially, because why? We need to see another retracement come in, another rally come in and fail. And then we start to head lower, making lower lows and lower highs. Right now, there's just a lot of chop, and I'm going to show that to you in the charts in a moment. Let's take a look at the S&P 500 weekly. The weekly, we've been below this big bearish rising wedge for 4 weeks, right? This absolutely triggered. We tried to get back in it, and even if we do get back in it and we take back half of this candle, which would be about 267, 270, and as you know, the first gap in the SPY is around 268, 270. So that would be a decent area. And then you have another big gap right up in here around 273-ish, 275. So that's something that we're going to monitor. But you can see histograms have finally now ticked one bar higher. Okay, we have a weekly RSI buy signal, but we're still negative in the MACD. But the histogram is still negative, but at least starting to make a higher low from the previous week low. This is no question bearish. We need to see how this is going to develop. Remember, this is a bearish pattern. Even though we have a bearish pattern on a weekly, the daily you can bounce back and forth, as you know. Okay. Now another reason why is that we have options monthly expiration that is occurring this week. Usually have a bullish bias to it. Now, can we sell off on Monday and then do turnaround Tuesday? Or we start to sell off, we open lower, and then we start that will be the low of the day, and then we rally into the rest of the week? Absolutely possible. You got to check the earnings calendar. Netflix comes out. There's a lot of big companies now that are coming out this week, and if they are good and they beat and they have some great expectations, that should buoy the market at least into earnings season, and then after that, I think anything goes with earnings season. But you can see here our ascending triangle. We did break out, but then we failed. There really was no technical damage on Friday. Really wasn't. You could see that we held that uptrend line. If we would have broke all the way back down here and we're outside of it, and then we're close to the 200, that's one thing. But you can see we have a lot of chop. There's still a couple of gaps that need to be filled. And I do believe that's going to happen. Do I tell you to run out and be long the market? No, of course not. I'm saying is that for the longer term picture, for the long term investor and the swing traders that are already long, you might want to just hold on. It might be a bumpy ride, but we'll see what happens. Now, the only way that this is not going to happen if we lose the 200-day moving average on a closing basis and we start to really separate, okay, that is going to be big trouble, all right, for the markets. And then at one point, these gaps will be left unfilled, and the market goes lower. We capitulate to the downside, and then we start the ascent higher, and then we fill the gaps later on this year. Okay, but I do think that we're so close. Why not fill the gaps? And also, it's in the best interest of institutions to sell. They are extremely long. They're still long. And you know what? PEs have come down. I mean, you're talking now forward PEs are 17 times. That's not expensive anymore when they were at 25 and 26 times. So, but nonetheless, I do believe the market has topped. And even if we were to rally back up here and pop its head above that and make new all-time highs again, I still think the market is topped. That would give us an ideal shorting situation, obviously, when that time comes. Now let's take a look at the NQ. Pretty much the same, guys, across the board. Ascending triangle, as you can see here, we held the lower end of this triangle right to the penny. And now we're going to look for chop here. The upper end of the TMT proprietary price channel will be the resistance area 67.76. The low will be Friday's low. That's going to come in right up in here around 65.99, call it 6600. You can see we had a distribution day, big red candle, and that's what I said to you about the last 4 days. We've been going back and forth here. Markets are pretty anemic, right? You can see that the volume was very, very light, and we had the lightest volume in the ES in a very long time. Okay, but again, we are positive in our MACD and RSI. Histogram is above, so that is a good sign. And we'll see what happens here. Remember, volatility seems to be here, and it's going to stay. This doesn't look like it's going anywhere anytime soon. Qs, pretty much the same as the NQ. You can see that upper end, that'll be the upper end area 164.41, and then the low would be Friday's low 160.62, and then of course the 200-day moving average on all of the charts you need to be paid attention to. Okay, big distribution day. So this is what I'm saying. Let's watch and see what happens here. Let's keep an open mind to the market, all right, before we look to do anything rash. S&P 500, as you remember, 68 to 268 to 270. That's the gap area that needs to get filled. The low will be the 264.14. Okay, that's going to be the spiders. And then daily chart in the ES, we did fill the gap. We did get our gap fill here, and then we sold off. So the low end in red will end the 21 EMA will be 249.99. Resistance will come in green. The upper end of the TMT proprietary price channels are 247.31. Okay, Russell 2000 did better than all of them. We are on buy signals in MACD and RSI. The lower end of that channel of 153.67, and then resistance will come in at 156.32 here. Okay, remember that head and shoulders pattern is still here. It's still valid, but remember we need to break the neckline all the way down to 144.71 before we take the head out or we do a head test. Okay. Next is going to be the transports, and the transports really held in there. We're looking to get into a buy signal here in MACD. RSI is on a buy signal, and we're still into that descending triangle here, right? We still can't break out. So this is a bearish pattern, but it's only bearish when we take that lower end of that trend line, which comes in at the 181.48. That coincides pretty nicely with the 200-day moving average of 182.15. So that'll be a big, big area of support to pay attention to in the transports. You can see very, very low volume in the IYT. All right, so the transports really did not succumb to much selling. All right, now let's get into our commodity section. I want to show you gold. Commitment to trade reports on gold has not as short from the previous 2 weeks, right? So they're reducing their short exposure a little bit in gold. But I do think that gold, unless something really crazy happens, and if we get a little bit of a rally, gold will start to fall again. Usually does, guys. You can see here we're kind of bouncing around here. Now we're starting to pick up a little momentum to the upside with the GDX. Look, if the GDX takes out $25 on a closing base and we get 2 closes above it, now I know that's a few points away, but then all bets are off to the downside in gold, right? Then gold's going to start to move up higher along with the other metals, right? Now if you look at GLD, you have the same thing here. GLD, we popped back up again, but remember this was one Wednesday where we had the FOMC minutes. We popped up, we failed, we gapped lower. That was an easy trade going into Thursday, and then Friday, gold really didn't even move. I mean, it rallied a little bit, but I mean, if we had all that fear going on, and may I add, the fear factor gauge is at extreme levels. There's a lot of extreme levels in our TMT trading model where we would suspect some sort of a bounce play going into this week. Not that it's going to be sustainable, but we should see some sort of a bounce here. Okay. This is the GC contract that you can see all over the place, right? I mean, but we still have our complex head and shoulders. It was still valid in that. And I want to show you something very, very interesting. Here is silver, all right? The crowd, right, the large specs, and we talked about this, I believe, last week, are still short silver, the most that has been in, I believe, in over 10 years, all right? Very long time. And the producers are not as short. They're short silver too as well, but not as much as the retail public. Very interesting when you have the producers short gold and the retail short silver, and also short the producers short silver too. So it's a lot of confusion going on here. So we're going to have to see how this happens. But when you have a lot of open interest that are coming up, you can see this way up in here, very large open interest call buying going on. That's not a good sign. Short buying going on. Just a lot of buying puts, big open interest, a lot of open interest contracts here, and they're looking to short. Looks like to me that silver is setting up for a very large move higher. Next, let's take a look at crude oil, and I want to show you the commitment to trade reports on crude oil. All right, and you can see they just continue to short this market, and it's pretty amazing that with the fact that what's going on in Syria, they're still short. They're actually short more this past week than they were the previous week. All right, where the specs are absolutely long. But there's a lot of bulls out there. I think it's a crowded trade. And I think at one point you're going to need a catalyst, no question, for crude oil to come lower. But the oil stocks are doing well. That's the money trade from last week. There's a lot of stocks that are breaking out. One SLB looks like it's really starting to break out here. Let's see what happens going into this week. We have earnings. Remember, you have to pay attention to all of the earnings calendars of stocks that you're trading or you're going to hold. You do not want to go into that knowing that at least you didn't know about it, that you were not prepared. All right, it could cost you a lot of money. Crude oil. All right, so we have the commitment trade report still short, and crude is breaking out. Well, remember, it's not a timing tool. It's something to know what the big players are doing, and then once you get your catalyst, and if so to the downside, this could actually be a real nice trade. We have a lot of talks coming out of Saudi Arabia that they see $70 oil prices, $71. Look, if crude oil rallied hard, 70, 71, I would be more inclined to short crude oil up in this area here. Absolutely. I think you have a lot of overhead resistance as well. Not on the daily chart, but if you look at the weekly chart, you can see, you can identify it. And I think that from there, I think crude will make a descent lower. And then if you wanted to buy crude long term, you would buy it somewhere down in this area here, okay? Somewhere in the low 40 handle.